The seasonally adjusted Coetzee PMI lost 4 index points in September and declined back to below the key 50-point mark to 46.2. So what are you saying? I mean, what do you think about this? That bounce back that we had last month was just a flash in the pan, some seasonal factor, some extraneous factor. Why on earth are we down here?
Well, yes, Lindsay, I think, as we discussed last month, the PMI has actually been going nowhere. It's been hovering around this 50 mark. So I think, this number really just a sort of a pullback to the numbers closer to those PMI numbers of our main trading partners that's been below 50 for quite a while now. So I think that is one of the reasons is the global situation. And then I think secondly, Lindsay, if we look at the impact of the strikes, the mining sector, that's actually quite widespread at the moment, and also now the transport industry on strike definitely playing a role in this weaker number.
Mm-hmm. Of course, we've got Sasha Naryshkine of Vestac with us at the desk this afternoon, Sasha, and we're confounded by the kind of activity we're seeing or the reaction on the markets today, given the kind of global PMI numbers that are coming through. Are you surprised at all?
I think they're slightly better than anticipated, for one. And I think for two, they're starting to show bottoming out. I think also at the same time, Eurostat released an unemployment number which showed that unemployment month on month in the Eurozone was flat, indicating that, maybe from an employment situation, things have stabilized in Europe, which bodes well for the future. So I think that in part is one reason why you're starting to see markets rally, at least this morning, because the news was slightly better than anticipated. So whilst it's still contracting, anything better than anticipated is good, right?
Sasha, I mean, I find it extraordinary that with the Chinese economy, the second biggest in the world, to which we are inextricably linked, the Chinese economy showing its manufacturing sector coming in below 50, so it's contracting. The Eurozone PMI over 3 months is the worst since the Great Recession. The unemployment rate in the Eurozone in general is at 11.4%, which is the worst in history, or since records began anyway. And we've got the South African PMI coming in at 46.2, which is a really, really big drop, a 4-point drop, and yet the markets are rallying. And bulls like yourself, and well done, you are bullish and you have been right. How can you cling on to these disastrous numbers?
Because it's all past, Lindsay. Everything's in the past. Tell me something I don't know. So, like I said, it's better than anticipated, which for one is always good for equity bulls, I guess, but two, indicating that we've bottomed, which is probably more important. So it's almost akin to, remember September 2009, I think, where we bottomed globally on PMI. The markets had already rallied for 6 months from the bottom. So I think a lot probably has to do with that. Maybe, I don't understand the PMI numbers myself, because I never quite know who the respondents are and who's
so
captured them.
let's at that point bring Andre into the conversation here. Let's put some explanation on the table for Sasha. I mean, who exactly surveyed here and at what time of the month?
Well, first of all, it's actually a very representative sample of respondents that actually contribute to the PMI. And it started in 1999 in South Africa. And if you look at the PMI as a sort of a leading indicator in terms of what's going to happen with actual manufacturing, there's a very high correlation between the two. So PMI is really a very good indication of what's actually going to happen to the manufacturing sector. So coming back to your point, a very representative sample of all the purchasing managers of a lot of companies, big and small, and also I think quite important, it does not really matter, it's not weighted in terms of size of the company, rather than, individual small company actually carries the same weight as a larger company.
How many in total?
Andre, please have a look at the sub-indexes within the PMI, the Purchasing Managers Index, the ones that interest me, which is the ones that seem to be recovering in China but not in South Africa. The first one is new sales orders, down to 46.2. You've got the price index, which is rising. So we've got a softening market but rising prices, which I suppose is sort of mini stagflation, if you like. It sounds slightly dramatic, but that is a sort of a trend that's come to the fore. And also the employment index coming down again. Which of those really stood out for you?
But I think there's probably one that you missed, Lindsay, is the business activity that actually came down from 50.6 to 43. And I think that was one of the main contributing factors to the bad number. But yes, new sales orders indicative of short-term demand. And again, I think, the global situation is at play here. And locally, locally demand is still there. So that's still, the jury's still out on that one. And then, yes, prices, definitely a bit of a concern, because if you look at what happened to fuel prices, diesel prices in particular, so input costs really on the rise at the factory gate, and you see it reflected in the sub-index here. Coming back to employment, as we spoke last month for the first time in a while, employment actually in the second largest sector in the South African economy looked like there was a ray of hope, but we thought it's going to be short-lived, and now it's back below 50, which just indicates that the manufacturing sector is still shedding jobs, which is not good.
Yeah. Of course, Sasha had tried to sneak in a question there just about how many companies in total you're looking at when you're putting this data together.
To be quite honest, we actually don't put the data together. It's actually the BER that does it. But we've actually looked at it, and they are the guys that's crunching the numbers, and statistically, they see it as a very good representation of the market out there.
Are you reading this as potentially the bottom here? Because, I mean, the domestic PMI is now on par with the trends that we're seeing in other factory sectors, of South Africa's key trading partners. But it took us a while to get there. So, if it took us a while to get here, you've got to ask the question, does it mean that we're going to be slow on the recovery too?
Yes, I think definitely slow on the recovery. I'm not that bullish in terms of a recovery as yet, and that we're bottoming out. Bottoming out could mean that we probably sort of hover at these levels for the next few months, which is not a good sign. So if anything, I would expect a surprise really to the downside still, because there in the PMI there's a ratio that we call the leading leading indicator within the PMI, and that is the ratio between new sales orders and inventory, and that is still below 1, which sort of does not bode well for a very quick or sustainable recovery on the one hand. And then secondly, if you look at the widespread strikes in the mining sector and the transport sector, it could also still have a negative effect on PMI and manufacturing in the next month or two.